May I now have the pleasure to announce our next session, session number 6 of this day 2 of the conference. The session relates to Sukuk. Sukuk, ladies and gentlemen, as you know, is the second largest contributor to the growth of Islamic finance. It's such a darling project and product of Islamic finance and has helped Islamic finance develop internationally as well. As we open the session, we thank you, His Excellency, the Chairman of AAOIFI, Sheikh Khalifa, for his presence and joining day 2 as well. Thank you very much, Your Excellency. May I have the pleasure to invite the Chairman and our esteemed speakers for this session. Remember, the session is on Sukuk. The main theme of the session is Sukuk, Sharia compliance and governance challenges and finding workable solutions. Please note that this session is extremely important because Sukuk has been in discussion since yesterday as one of those areas or products or projects of Islamic finance that can not only deliver to economic diversity, play its role in fintech, in climate finance, green Sukuk and whatnot, but has its own identity in the development of Islamic finance. And AAOIFI is and has been doing a lot of work to support and promote the standard setting with regards to this beautiful product of Islamic finance. So, without further ado, may I have the pleasure to invite Mr. Lamido Yogada. Mr. Lamido Yogada, he is going to be our esteemed chairman of this session, ladies and gentlemen. He's the Director General of the Security and Exchange Commission, Nigeria. Mr. Lamido Yogada, we are waiting for you on the stage. While he makes his way on the stage, may I have the pleasure to invite the very honorable expert panelists, our dear Dr. Waleed Hijazi. Dr. Waleed Hijazi, please grace us on this stage. Dr. Waleed Hijazi is a managing partner and co-founder of Hijazi and Partners in Egypt and a prominent contributor for AAOIFI as well. Dr. Waleed Hijazi. Assalamu alaikum. Good to see you. Might I have the pleasure to now invite dear brother Muhammad Nazir Mia. Muhammad Nazir Mia, he is the head of internal Sharia control, Dubai Islamic Bank, UAE. Brother Muhammad Nazir, please join us on the stage. Good to see you, brother. Mr. Saif Shauki. Saif Shauki. Brother Saif, welcome to you on the stage. Looking forward. Brother Saif is the Associate Director, Islamic Finance, Fitch Ratings, the United Arab Emirates. Our dear own, the CEO and Secretary to the Board, International Islamic Financial Market, Bahrain, the esteemed Mr. Ijlal Ahmed Alwi. Mr. Ijlal Ahmed Alwi, the CEO and Secretary to the Board, International Islamic Financial Markets, IIFM, Kingdom of Bahrain. Gentlemen, pleasure having you on the stage. The chairman, again, I want to announce the chairman, Lamido Yogada. Mr. Lamido Yogada, the stage awaits your presence. Mr. Lamido Yogada. Mr. Lamido Yogada, are you around? Mr. Lamido Yogada, calling out Mr. Lamido Yogada. In his absence, ladies and gentlemen, I will perform the services of chairing the session, inshallah ta'ala. Once he's here anytime, then he can, of course. Oh, there he is. Mr. Lamido Yogada. A needle in the haystack, Mr. Lamido Yogada. Thank you very much for being in the conference, for gracing this with your presence, and now chairing this session. The stage is set. Our esteemed panelists are here. The session chair is here. And off you go. All the best. Please stick to the timing of the session because after this is the most anticipated item, the lunch.
Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. So we have this panel number 6, and our task is to discuss Sukuk Sharia compliance and governance challenges and finding workable solutions. We are going to look at the Sukuk in terms of the market, in terms of the structure, of the instruments, in terms of some of the key challenges that have actually, presented, over the years, and, what the standard setters have done, and what the practitioners also, have actually done in the market. We are going to look at the role of the rating agencies in rating Sukuk and the impact of Sukuk ratings on the development of the Sukuk market. I have a very distinguished panel to really do justice to this topic. I have Dr. Walid Higazi. He's the managing partner and co-founder of Higazi and Partners in Egypt. You're very welcome, sir.
Thank you. Thank you very much.
I have Mr. Muhammad Nazir Mian, who is the head of internal Sharia control at Dubai Islamic Bank in the UAE.
Thank you.
You're very welcome, sir. We have Mr. Saif Shauki, Associate Director of Islamic Finance at Fitch Ratings. You're welcome, sir. And last but not the least, we have Mr. Ijlal Ahmed Alvi, Chief Executive Officer and Secretary to the Board of the International Islamic Financial Market in Manama, Bahrain. You're all welcome to this panel.
Thank you.
So I think we have, I will start from Mr. Alvi, who has a presentation to make. So we'll keep to 7-8 minutes for our presentation so that we can also delve into a lot of the questions that we have and which I expect the audience will have. So please, sir.
I think I will. Bismillahirrahmanirrahim. Salatu wa salam ala nabiyyina Muhammad wa alihi wa sahbihi ajma'in. Assalamu alaikum wa rahmatullahi wa barakatuh. Indeed, it is a pleasure and honor to be here, and I'm thankful to AAOIFI for inviting me in IFM. What I will try to do is, one of the things to cover is looking at the global Sukuk market, how it has evolved over the last 20 plus years now, and what are sort of things we have seen, and what kind of structures have been used, and who are the key drivers. And I will also try, although time is limited, to see what could be certain challenges what we have seen over this course of this period. And if you sort of see the Sukuk market, and we do this Sukuk report for the last 12 years, so my slides are from that, but I will sort of mention few things which some of you may not have heard this before, but to see how the market has evolved in 2022. If you look at the Sukuk overall, its contribution to the Islamic industry in terms of its value, and if you see IFSB Stability Report 2022, Sukuk forms about 25% of the Islamic industry size, which as per IFSB in 22 was 3.25 trillion. I know now it's been updated, so it may have gone to 4 billion or 4 trillion, but that's the figure. we used, and then we used our outstanding sukuk, which I will briefly mention. And if you see how sukuk market has evolved, of course we covered 2001, most of the sukuk have matured. So whatever is left is we just started, instead of giving you right from 2001, 2010. And if you see 2010, it includes, of course, if there is any outstanding for 2009 sukuk or from 2008 sukuk, it is part of that. And you can see the market as a whole, we have sort of seen the financial crisis. And at that time, we have seen, the legal issues, how sukuks are being structured. And there was a talk about, equity-based or debt-based. That's something, if you see, it depends on the sukuk structure, which I will mention. And you see, in 2015, there's a drop, but it's not a red line. The reason is that this one is a strategic adjustment for the short-term sukuk. Previously, especially for Malaysia, the short-term sukuk were for not only liquidity management, but for investment. But then they decided to make the short-term sukuk more for the liquidity management. So they took out that short-term sukuk. So you see a drop. Naturally, they were big volume. And then you see overall, the market sort of, over the period since then, it's nearly 8 years, has improved. And you can see overall, the market, despite, we are linked to the global economies, we have global benchmark rates, which in some cases we have to use. In some cases, you use your domestic sukuk issuances, your domestic rates also. So those are the things. But overall, we can say that market has been, sukuk as a whole, has been resilient. We have, of course, I don't have time, but we have about, which countries issued what and all details in our report. But you can see about 27 to 30 countries has now been issuing sukuk. We have seen also Egypt has joined also a few years ago. And there are other African countries, Nigeria also joined, and other African countries as well. And beside the Far East and many other countries which are there, which you can see. So overall, we had about 183 billion. And you can see overall sukuk being issued is about 1.8 trillion, but some of them have matured, and I will mention about the outstanding size, what is based on our data, which is authenticated by many regulators, which we are thankful. This is what you can see in terms of the long term and short term. Of course, short term, we look at it more from the point of view, from liquidity management point of view generally. And here you will see the figure in short term sukuk issuances is now driven by domestic issuances. You have, IILM, which is issued short term sukuk in the dollar or euro, in some other currencies they are looking into. So that overall had an increase of 15, but if you see overall the long-term sukuk, there was a drop. But this is how the economy is, how inflationary environment we have seen has affected. So it's not something which, there was any major issue in terms of the sukuk itself. But these things, if we are, in some ways interlinked with global economies, these things are, part of, our sukuk market. This is looking at your international sukuk, and these are defined in the hard currencies or more tradable sukuks. And obviously, one reason could be that there is a drop you can see in 2022, could be the benchmark. We have a major inflationary environment. And that's one of the main reasons. Maybe some issuers have decided to delay their, we have from banks also, they can also mention that. So this is something which on the international sukuk. If you look at it in terms of international sukuk versus long term and short term, you can see this 13-14 billion is from ILM in dollar. The rest is your domestic, about 22 billion. Domestic are basically the main sort of a driver, if I may say. Although international sukuks are always, in limelight, and we always see international sukuks major headlines. But then you have various domestic markets which are now coming. And as I mentioned earlier, from the Africa region also we have seen, we have North Africa as well, we have Far East, we have Bangladesh, we have Pakistan, other countries which are basically taking up Sukuk as one of the main instruments. And that's where you can see that still in domestic market, Sukuk continue to, issuances have increased. Then you can see, like I mentioned earlier, in 2015 there was a drop because of the short-term Sukuk, change of strategy, which sometime you have to keep in mind. In certain jurisdiction, they may decide certain things, which is better for that particular market, is better for the industry. We can see, and you can see how short-term Sukuk since then has progressed. It is back to about $49 billion. And you have about $98 billion of long-term Sukuk issuances in domestic currencies. We always, I remember 10, 12 years ago, at financial crisis time, we used to say that domestic sovereigns have to take a higher role in this issue. They have to drive, the industry. Generally, we have seen the regulatory role or the sovereign is very, very critical for Islamic industry. And since then, we have seen that there is sort of a continuous issuances from number of sovereigns. In fact, one of the things which you'll see is that sovereigns has always been the major issuers, what we have seen. And last year is the case, as you can see. Quasi-sovereign, and there I think you have to keep in mind in the financial crisis, especially we learned one thing, and the transparency is highly important. And from our standard setting point of view, I think that's one of the key elements that you need to create transparency. What are you doing? What are the basis of issuance, whether Sharia or other aspects or legal aspects. And we have seen in some cases, there could be implicit guarantee by the sovereign, or it could be explicit. And that case was highlighted, and I think generally now maybe you can see in the documentation that it is covered that if it is not an implicit government guarantee, then it is basically government is not really a sovereign. So that's something when it comes to quasi-sovereign you can keep in mind. And we have seen quasi-sovereign could be issuing in terms of power projects and other projects. We have seen some, from Saudi also we have seen other countries which are issuing quasi-sovereign. They continue to issue. Of course, last year was not, in terms of their slight drop. And that's again one of the, I think, potential area for us to basically as an industry that can further improve the issuance of quasi-sovereign. I think this is one of the main sort of area which is a potential and which is still, I think, is the challenges, maybe lack of asset availability, maybe other factors. Apart from a deep market in Malaysia, there is basically from the corporate sector less issuances. We have seen some issuances now, some other countries. GCC, of course, also issues in some cases. But I think this is a greater really area for us to look at it, and that's the challenge. And if you see in terms of certain countries, like for example, Indonesia, they have looked at from retail side of also. And that is where there has been sort of some smaller, we have seen based on crowdfunding platform. They have issued a very small size sukuk or short-term sukuk, which is an interesting development if you see from that corporate segment or that SME which we look for. And I think these are the good examples for us to basically take it further. We have seen good use. I've seen like only $25,000 of SME issuing a short-term sukuk from Indonesia. So I think these are something which are for us to take it forward and to further develop the industry. Then we have FIs very quickly. I'm sure quite a few are from the banks. And generally we have seen from GCC and also Malaysia and some other countries issuance of tier 1 sukuk based on mudarba. And we know those are now mudarba, there is no undertaking. So these are issues which are issued by number of banks for their capital adequacy requirements purposes. There could be tier 2 also, which could be issued, but tier 1 is the Mudarba perpetual. There is no put option. If you want to learn what put, and I'm sure you all know. So there is no put option, but there is a call option generally there for these perpetual. And naturally, I think one reason could be the drop, and this is another potential area for us to see. The drop could be in the benchmark rates. And if they are issuing international sukuk, we have seen number of issuances from Saudi or UAE and other countries, which could be dollar-based sukuks. Generally, that could be one of the reasons. The requirement may have changed. They may issue now in 2023. So these are the adjustments which we have to, because of the interlinkages, we have to be aware of, and how markets basically behave. I'm sure there's something on the rating side my brother would like to also cover for the tier 1, but that's something, it's something to see if you have time, inshallah. These are very quickly, we have the structures. I don't want to really go too much details. This you can see how structure-wise sukuk are being issued. And we looked at it, from the point of view, I will mention about the asset-based and asset-backed. But inshallah that question can be maybe answered. But if you look at it, sukuk, they are basically, of course, underlying requirement is always there. You have AAOIFI tangibility ratios to be also addressed, and these kind of elements. But you can see in the short-term market issuances, the role of murahaba could be greater. Ijara has been from the beginning is one of the key sort of structure which has been used, and is around 19% last year. You can see, combination or hybrid sukuk. For our report, when we sort of do this distinction, we spend a lot of time, and you can see we have mentioned some places only wakala. We have some places mentioned murabaha structure, which is in Saudi, and we have mentioned only hybrid. It could be hybrid, could be in 3 contracts, although the contracts are separate contracts. So that is something one has to make a note. That's why we have, wherever possible, to provide that distinction. This is your international sukuk, and you can clearly see the international sukuk reliance on ijara is there, still 19, but you can see the wakala sukuk. And that could be one of the reason, could be, of course, the tangibility ratios is there, but the wakala could have other contract like ijara could be, with mudarba contract could be possible. And these are sort of a more sort of, which I really don't call it, but asset light requirements in some cases could be the reason why we have, these sort of wakala, which takes the larger share of the sukuk issuances. These are your domestic sukuk issuances. And here you can see clearly the murahaba 29%. It could be what we have seen. The reason is that your murahaba sukuk is for liquidity management. And we know generally, mashallah, mashaykhs are all here, they know, but murahaba, you are generally widely acceptable. It's not tradable. So it's generally could be, kept for liquidity purposes. Or you can have sort of a wakala which give you flexibility in terms of the trading. So this is something which you can clearly see. Domestic level, certain structures are greater in use because how the domestic market they operate, how the regulators sort of develop that market, which is how the marketplace itself have worked on it with the scholars. This I'm reaching sort of a slide of total issuances of about nearly 800 billion outstanding sukuk. Which are as of 2022, to be precise 794 billion. And then share of international, as I mentioned, is 611 total issuances of outstanding for domestic market. So that's had the larger share, as you can see, as compared to the international outstanding or share of 182 billion. So this is something which we have seen the Sukuk market overall, how sort of, it has progressed over the period and how it has developed. I will just, if a few minutes, I will just mention, of course I mentioned about the size of Sukuk. We have seen Sukuk issuances of green Sukuk issuances, which are around 30 billion now, if my sort of mathematics is correct, or around 35 billion as of now, of green Sukuk issuances or sustainable Sukuk issuances. That's another interesting area which we have to see. We have seen that role of asset back, and that's something when we look at the documentation IFM, we can always do that. But that have certain challenges, which I'm sure we will cover, which I think segment need to be developed. But that's totally a different segment which we have to see how that is being developed. And I did mention about the Indonesian on the crowdfunding platform, SME Sukuk issuances of very smaller companies on the short-term basis, so they kind of manage the risk of counterparties, in that case, or risk of the issuer. With that, Shukran, I hope I am able to provide you some information which will be useful, inshallah. Shukran. Assalam.
Thank you. Thank you very much, Brother Ijlal, for that very comprehensive view of the Sukuk market. So we now know really the size of the market, the different components of the market, domestic, international, also the short-term, long-term, and who actually issues, and some of the exciting new developments that we are seeing in the market. So I think now I will call on Brother Walid to just give you you don't have a presentation, but you will I'll give you a few minutes to just lay the your thoughts before we delve into the question and answer. And just mark you. I have a lot of questions, so if you can really
Thank you, Mr. Chairman. In fact, this is very interesting. I'm sure we've been having a lot of presentations and discussions about Sukuk, different structures of Sukuk. In the beginning, we have to say that Sukuk, if there is one single contribution to the world of finance to be recognized by everyone, that was contributed by Islamic finance, to me the most significant contribution is Sukuk. It is truly a different product, different animal. And unlike most of the instruments we have produced in Islamic finance, Sukuk doesn't really try to mimic an existing conventional product. So, in fact, it stands in contrast to existing conventional alternatives. So, for example, it stands in contrast with bonds. It's not supposed to be a debt instrument that burdens the balance sheet of the issuer of the debt. And also, it is different than equity shares or Sukuk in the sense that it is remote and separate from the financial burdens of the company issuing or seeking the financing. So it is really a ring-fenced asset financing mechanism, bankruptcy remote, and also it's not a debt instrument. So this is something that I thought when I was a student doing my PhD, and that was the beginning. We heard about Sukuk in early 2000s, that this is a product that can fly and will definitely lead all the products of Islamic finance and it will reach, alhamdulillah, the stages that it reached today in development, but I still expect this even to increase with time. So the problem with sukuk is that the majority of the sukuk issued today do not really take advantage of this different nature of the instrument or features of the instrument. Unfortunately, the pressures of the practice led to pushing the sukuk more towards that, to mimic the behavior of bonds more than actually equity. And that obviously led lawyers like myself and bankers to try to structure, to use, somehow mold and change the structure of the sukuk to try to somehow meet the demands or the requirements of the practitioners. I can't say of the issuers, I can't say of the institutions, but that's the easiest thing they know is how do we treat this? We're not going to be able to change the regulations and the laws that govern those products in a certain jurisdiction. So the easiest way is to try to structure it like a bond. And that's where we have the asset-based sukuk leading the market versus the asset-backed sukuk. The difference is that the asset-backed sukuk, they provide the sukuk holders with undivided proportionate ownership certificates in the underlying assets, with no recourse against the issuer, and the ultimate recourse is against the underlying assets, whether there is an undertaking at the end at maturity or not. But at the end of the day, if there is an undertaking, it would be at market price, and that will preserve the equity feature of the structure. The asset-based sukuk, which is the more prevailing structure, and it is the less Sharia compliant, and I really won't really be able to speak to the compliance aspect of the asset-based sukuk more than our esteemed scholars sitting in the room. They obviously have voiced their concerns about that. But in the asset-based sukuk, you don't have a true transfer of ownership, you don't have a true sale, you have only transfer of beneficial ownership. And the ultimate recourse is against the issuer. So the creditworthiness of the issuer still really is the ultimate recourse and the ultimate, I would say, insurance or guarantee that you look for. We have seen fatwas, we have seen legal opinions about the Sharia compliance aspects of those sukuk, but we haven't yet seen any significant move away from those structures. We also have structures like hybrid sukuk, as Mr. Ijlal has mentioned in his report, which gives another opportunity to try to increase the tradability of a sukuk, because if you are using a debt-based structure for your sukuk, you won't be able to trade it, like a murabaha structure, for example. But if you pull it together with an equity-based structure, like an ijara or a musharaka, then you will be able to, and obviously you have to give, the majority of the assets have to be more under the equity structure, at least 51% according to most Sharia opinions, then you will be able to trade those type of sukuk. I think that we have to emphasize the different nature of sukuk. It is really sellable even to the conventional world of finance. It gives an opportunity, greater access to finance to projects that can't seek debt because maybe of the financial status of the issuer, and also doesn't want to dilute ownership. So this is truly a different instrument that offers diversification opportunity for issuers. And I don't know why we're not marketing sukuk in that sense, rather than we are trying to hide those really important features away and try to really belittle the stature of sukuk by trying to mimic it more than to debts. Thank you. I hope this is useful, at least as an introduction, and I'd be happy to dig more into details later on.
Thank you very much, Brother Walid. I think you've really done justice to, I had those questions, further down, but I think you've just, nailed them, because we have talked about the resilience, of the sukuk, about, you talked about bankruptcy remoteness, the fact that this is really based on, assets, okay, and, I think we're coming to Brother Saif at some point, to discuss the issue of ratings, and that's why when you look at ratings, we don't say credit ratings, we say sukuk ratings, okay, because we are trying to really de-emphasize the credit part. But what you're saying is that really the asset-based sukuk are the most prevalent in the market, unfortunately. And they are also the least Sharia compliant. I actually note that. So thank you very much for that, a very important contribution. We are going to come back to you later. I will now want to give Brother Mian the opportunity to just also lay his initial thoughts, okay, and then we can delve in. Brother Mian.
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you, Brother Lamido. At the outset, let me express my appreciation for and thanks to IOP and other organizers for organizing this annual event. It is indeed an effective forum for a practitioner like me to know more about latest development in Islamic finance, its challenges, and the way forward. It is all about taking stock and positioning the best possible support to Islamic finance industry. It is also an indicator of the level of the engagement of the industry and the support it needs from all stakeholders. Sukuk is a very important instrument. It falls under, as they call it, Islamic debt capital market segment, and it has been presented as an alternative to conventional bond. I have been fortunate to work with scholars, practitioners, arrangers for the last 18 years. And my assessment and reading is that on the substance side, like any other Islamic finance transactions, you need to ensure the identity of the transaction and how you establish that identity. That identity can be established through the Sharia nominated contract, which underpins that transaction and that structure. Number two, the values Sharia compliance that transaction offers. And on top of that, you need to see the spirit and objective of the transaction. Yes, there have been certain challenges, but based on immense contribution from scholars, and honestly, I'm fortunate to to see that, some of the pioneer or the founding member of the IOFIs are still, associated with IOFIs and certain Sharia compliant institution or Islamic financial institutions. They are offering their support to ensure that those, the issue of identity of the transaction, Islamic finance values, spirit and objectives are truly reflected in the transactions. Let me share one experience of the one we have in the UAE. For the last 5-6 years, post establishment of a higher Sharia authority at the central bank level, Central Bank of the UAE has adopted a very pragmatic approach. That, in my opinion, and others may echo their sentiment, that aims to achieve the following: ensuring an effective and meaningful Sharia compliance in the transaction, adding more clarity to the fundamentals, standards, regulation, and guideline. In that context, they have introduced IOFI Sharia standard as minimum Sharia standard on which a Sharia compliance of any transaction can be tested. Ensuring the engagement of the scholars as the stakeholder with the industry, giving the control back to Sharia scholars on certifying whether a transaction is Sharia compliant or not Sharia compliant, opening a consultative communication channel between the stakeholder or among the stakeholders that includes critical stakeholders as Sharia committees, Sharia scholars, Sharia advisors, arrangers, practitioners, and also other stakeholders like rating agencies as well. On top of that, what helped us get this approach is that we saw a wider acceptability of the Islamic finance transactions, i.e., that has provided a passportability to Islamic finance instrument across the globe. And that approach has really worked very well. We saw that that has positively impacted the choices of the issuers, even the first-time issuers as well. We saw some of the most reluctant issuers came to the market among the sovereign as well. And if you look at, as Brother Jalal has mentioned, if you look at the timeline, number of the transaction, ease and the pace at which these transactions came to the market and got closed, that is, is a reflective of the fact that a standardized and a universally accepted approach introduced by a regulator has really helped, regaining and retaining and maintaining the control on the transaction from a Sharia compliance perspective as well. That has also, lend the support in terms of regaining the confidence in the Islamic finance industry, and particularly this most important instrument, which is called fixed income instruments. So apart from these academic discussions of asset-based, asset-baked, and when it comes to ensuring that on the substance side and also in terms of choice of the form, whether these instruments are consistent with the spirit of Islamic finance, my take on this is that I have experienced a lot of support from scholars, and also when they certify a transaction, they look into all these aspects as well. And most of the transactions in the last 5, 6, 7 years, majority of them have gone through a reasonable level of the Sharia compliant test, and they pass the test, and that's how these instruments are presenting themselves as the most most favorable choice for the issuer, including those issuers where there is no presence of Islamic finance. So we have seen in most recent months some of the issuers coming to the market even you hardly find a single Islamic bank there. And thanks to this wonderful experience we have seen in the UAE that has enhanced the confidence of the stakeholder in the Islamic finance instrument. Thank you, Mr. Chairman.
Thank you very much. This is excellent. This is very interesting, bringing practical example of really the state of play as far as scope structuring in the UAE is done, and to ensuring that it is really Sharia compliant. I will now give Brother Saif opportunity. You have a presentation to make, and please go ahead, make your presentation. Keep to the time. We still need to.
Sure.
And if you can keep to the sukuk part,
don't worry.
that will be thanked.
Respected Sharia scholars, regulators, Assalamu alaikum wa rahmatullahi wa barakatuh. I'm going to try to keep it short and simple in this presentation, as we had many esteemed speakers giving this perspective. When it comes to my presentation, I'm going to walk you through Fitch Ratings perspectives on the global Islamic finance industry, where I'm going to cover multiple areas like the credit rating landscape in Islamic finance, the demand and supply drivers, the performance, outlook and challenges, and the way we approach rating sukuk and Islamic banks. So we have been, as Fitch, present in the Islamic finance ecosystem for more than 15 years. Much of our credit ratings have been concentrated in the Middle East, parts of Asia. We have also entered North America through the first of its kind corporate sukuk in the US. Just recently, we rated the first sovereign sukuk by the Philippines. There's been increasing activity in the markets. We saw Egypt issuing the first sovereign sukuk too. Many corporates over the years, many financial institutions, including conventional banks, have also issued these instruments. And we rate more than 70% of the US dollar global sukuk market. As I mentioned, most of our ratings are concentrated in the Middle East by 61%, and a good chunk balance between Asia, Europe, and Africa. Most of these are financial institutions. When it comes to FIs, part of it also includes supranational entities. When it comes to credit ratings in the sukuk front, close to 80% of what Fitch rates on the outstanding market is investment grade. By investment grade, I mean those outstanding sukuk which have low risk to moderate credit risk, while the balance, almost 20%, is what we classify as speculative grade. And much of it actually is in the A category, as you would see. When it comes to the outlooks, much of the issuers of sukuk have a stable outlook at around 93%. You have around 4% of issuers actually on positive outlook, and we could see changes in the medium term. Now we have regulators sitting in the audience, we have customers, we have Islamic banks. There's occasional questions of what can the stakeholders do to increase the penetration of Islamic finance in the respective markets. Since we stand and between regulators, between banks, between customers of Islamic finance, we know that there are two verticals which drives the performance of Islamic finance in any market, be it sukuk, Islamic banks, takaful, and these are those. So at the moment, more than 70% of the global Islamic finance ecosystem is concentrated in the Middle East, Bangladesh, Malaysia, Indonesia, Turkey, and there are certain common drivers, both on the demand verticals, as you can see, and also on the supply verticals. In many of these markets, there's actual bottom-up demand for Islamic finance. There's actually awareness, in countries like Bahrain, where we are, in Kuwait, in Saudi Arabia. The sector has been present since the 1970s. So many of the customers, when you walk on the road, you will see Islamic banks across. So the distribution networks are actually there. And there's increasing confidence that these products are actually Sharia compliant. Not only that, in many of these traditional markets for Islamic finance, there is no, the competitiveness of the product offerings when it comes to pricing, service quality is really comparable, and sometimes even better than conventional banks. There's also supply side drivers, right? Where there's a political will in countries like Bahrain. There's enabling regulations. There you can see branch networks. There's products which meet the demands and requirements of the customers. And in general, in the GCC and Malaysia and Indonesia, we see that the domestic financial system, of course, it's not as developed as some of the Western markets, but it's relatively more developed. So that supports the penetration of Islamic finance in many of the OIC countries. Having said that, there are still Muslim majority countries like Turkey, like Indonesia, like Nigeria, like Kazakhstan, like Morocco, Algeria, where penetration rates are really low. Sometimes it's less than 1%, 5%. Turkey, it's touching 10% right now, but just before 5 years ago, it was around 6 to 7%. And there were gaps in both the demand drivers and both the supply side drivers, whether it's lack of political will and sometimes even lack of confidence. We occasionally are asked, are Islamic banking products really Sharia compliant? They seem to be the same, they're marketed the same way, the pricing is the same. So is it really Sharia compliant? Those questions are also asked in some of these markets. But I think awareness is increasing, and this is effective in the size of the global Islamic ecosystem, with total assets of about $3 trillion as of 2022 end. When to talk about the performance of the global Sukuk markets, we saw for the first time that the size of the market crossed $800 billion this year. This is a remarkable number. It speaks not only to of course, the size, but there is also diversity in issuances. We have seen 81 Sukuk, 82 Sukuk, we have seen ESG Sukuk, green and sustainable Sukuk issuances, short-term, long-term, medium-term Sukuk, by all kinds of issuers in the market. As I said earlier, we had Philippines in the process of entering the market. UK had entered the market twice, I think as recent as a few years ago. Nigeria has been returning to the Sukuk markets. And there are multiple drivers why many of the FIs, sovereigns, corporates are seeking to enter. Number one being they are seeking to diversify their funding sources. So away from, for example, bank loans and conventional bonds. The other reason is in many of the OIC countries like Bahrain, Kuwait, Saudi Arabia, Indonesia, Malaysia, they're expected to mark budget surplus as of this year and potentially going forward next year. So to fund this fiscal gap, there is a need to issue debt instruments which could meet the funding needs of the government. And there are institutions, which really have a strong appetite to invest, namely Islamic investors and Islamic banks, who have strong appetite to invest in Sukuk instruments. In fact, there's always a constant discussion among bankers that there's so short supply of Sukuk in the market, so we need more of these instruments in the market, whether they're on the liquidity front, but also as an investment tool to benefit from. But over the last 1 year, we are seeing that the higher oil prices are reducing the funding needs of a number of oil exporting countries. Nevertheless, countries like the UAE and Qatar, they're continuing to enter the debt capital markets, Sukuk markets, to develop the DCM, the debt capital markets, and be active in the markets. The UAE issued their first dirham Sukuk, with the pricing actually benefiting and priced less compared to the dirham bonds. We saw Qatar a few years ago. Nigeria has been active too. So when it comes to defaults, there's discussion of default resolution and whatnot. So far, the number of defaulted Sukuk is just 0.2% of the global Sukuk market, which is actually very less. And it speaks to the credit health of the Sukuk markets. Nevertheless, it speaks also to the lack of precedence on how Sukuk will be treated in a court default resolution process. And will Sharia have a consideration or not? There's a very interesting development that's been happening over the last 2 years. Many of the issuers in global Sukuk markets, be it Indonesia, be it Turkey, be it even Philippines right now, they're aiming to comply the documentation with AAOIFI Sharia standards. This is actually unprecedented, more than 3 years ago. But the reason is because there is a push from the UAE Central Bank to make sure that the Islamic banks there can only arrange or invest or issue sukuk which comply with their IOFI Sharia compliance mandates. And as a result, we are seeing increasing languages like tangibility event, additional put options. I mean, many people may not know. Actually, Islamic investors may actually have additional put options in the documentation, which conventional investors don't have. But again, this is an untested territory from a court's perspective. But those sukuk which are not IOFI compliant, we're seeing that the liquidity could be affected, the demand could be affected as UAE Islamic banks, which really are global investors in sukuk, are constrained from investing. We are seeing that some Islamic banks in the UAE, they could not invest in sukuk from Saudi Arabia and Malaysia because of Sharia differences in the Sharia opinions. We have seen funds, we have seen Sharia indices which exclude sukuk which are not IOFI compliant. So we are seeing increasing standardization in the markets, and definitely compared to 10 years ago, it's easier now to compare sukuk, but there are certain gaps. All in all, we see that 2023 will end with higher amount of US dollar sukuk issuances compared to last year. Geopolitical volatilities, rising interest rates or profit rates will continue to may have pressures, on sukuk markets similar to bond markets, and the market really is not cocooned, from the challenges facing the sukuk markets at large. The pricing of sukuk, compares to be similar to conventional bonds, as you can see in the graph. But there have been periods in the past where you see a blip between the pricing of sukuk and comparable bonds. And this happened, for example, during the COVID stress. This also happened during, the incursion of the Russia-Ukraine conflict, where the pricing deviated. But our understanding is that this could be also because of Sharia differences or Sharia interpretations, IOFI compliance complexities, and also because many of the Islamic investors, Islamic banks, are actually buy and hold investors. And they don't actively trade these instruments because of shortage in the market. ESG Sukuk, the UAE is hosting COP28 in a matter of few days. And this has put the spotlight back again on Islamic finance and ESG Sukuk, as the UAE is one of the key markets for ethical and Islamic finance in general. But I want you to look at this interesting graph or interesting table where in many of the countries where, Muslim majority countries, whenever a corporate or a sovereign wanted to issue an ESG linked debt, they have two options. They can go through the route of a bond or go through the route of a sukuk. In the GCC, around 51% of the time, they went through the route of a sukuk. Bahrain is actually 100%. Saudi Arabia around 54%. Why is this? Why is this the case? Well, to address and incorporate regional investors, which can only invest in Sharia-compliant securities, and the ESG tag helps issuers actually attract the international appetite for Islam, for ESG-sensitive investors. Nevertheless, we see that gaps remain in the ESG market. When it comes to Islamic banking, it's a fact that Islamic banking is systematically important and has sizable shares in many of the OIC countries, be it Bahrain. In Bahrain, it's expected to reach 50% market share in a few years. Kuwait is already 50%. In Saudi Arabia, the Islamic banking share is around 85% of the banking system. Malaysia is around 40%. So it's really a part of the DNA of the national economies in the OIC countries, in many of the OIC countries. Yet we are still seeing pockets of growth. We are seeing Oman, for example, just entered the market 10 years ago, around 10 years ago, and they have around 16% market share. There are initiatives in Nigeria. Many of the regulators, historically they used to shy away from Sharia compliance discussions. Now they have active governance regulations for Sharia compliant banking. So, and in the GCC at least, the operating environment is much more favorable now with the higher oil prices and rising profit rates, and this supports the appetite to grow forward. Fund management also is growing. It's around $505 billion in the outstanding values. I'm going to quickly touch base upon the rating methodology of Fitch when it comes to sukuk. This is visible on our website when it comes to how to rate sukuk, but in fact, almost all of the Fitch rated sukuk are asset-based sukuk, or the recourse lies with the obligor itself. When it comes to the economic effect, they are in most instances pari passu with conventional bonds. When it comes to debt ranking, yes, there are structural differences, but the economics are similar. There are specific considerations which we consider when it comes to rating sukuk. When it comes to Islamic banks and the way we rate Islamic banks, it's covered as part of Fitch's methodology for rating such institutions, but we have specific considerations actually for Sharia compliant institutions. Doctor was discussing about profit and loss investment accounts. We understand that in many countries there's specific regulations for PSIA accounts. There's the benefit of alpha factor in a number of countries where there's discounts on capital ratios. There's different accounting treatment for Islamic finance in countries like Bahrain or countries which follow AAOIFI accounting standards. All of these have due considerations in the way Fitch rates sukuk and Islamic banks. When it comes to standardization in Islamic finance, we have been active in the markets for more than 15 years. There is still differences across, dispute resolution, products, Sharia interpretation, supervisory treatments, and even accounting treatment. Yes, there are bridges being bridged with the implementation of AAOIFI Sharia standards, but sometimes the differences are paramount, and we look at these differences very carefully when we rate sukuk instruments. I'm happy to have discussions on the panel and off the panel whenever you feel. Thank you very much for listening.
Thank you very much, Brother Saif, for that very comprehensive look. I'm now very mindful of the fact that we have eaten, into our time. But I want to, ask the distinguished, panel. There's this controversy around guarantees for sukuk. What guarantees are acceptable from the Sharia point of view, and what guarantees are not? I start with Brother Walid.
Well, it definitely depends on the underlying structure you're using, and it is very common in practice that Islamic banks tend to double up on the securitization and the guarantees. And the reason for that, sometimes it is mandated by a conflict between the local regulations and the Sharia compliance requirements. So for example, in transactions where you have, let's say, a transfer of the ownership to the institution, to the bank, to the financer, it doesn't really, if it is through transfer of ownership, then you really can't have any more guarantees because you have ownership of the asset itself. But oftentimes, it is a transfer of beneficial ownership only, and the legal title remains with the entity seeking finance, right? However, in addition to that beneficial ownership, you would want to get real collateral, right, as a financial institution to be able to secure, your position. So in addition to the beneficial ownership, you can get guarantees, corporate guarantees from the issuer themselves. That is acceptable under the regulations. And if it is only beneficial ownership, some Sharia scholars would allow that because it is not, they recognize the beneficial ownership transfer and not the full or the legal title itself.
Thank you very much. I would have loved to continue this panel, but I have just been told that lunch is ready. And I can see Professor Yahya raising his hand. I have been told that lunch is ready, and I think...
Sorry, gentlemen. I mean, yes. So we're pressing for time. So any questions, of course, these beautiful gentlemen are available at your disposal at the lunch zone outside. So please reserve your questions till then, and let's inshallah ta'ala, allow the chairman to, finish the session, inshallah.
So I think this is really a very topical thing, because this is really at the heart of, Islamic finance, the issue of Sharia compliance, and we have not even gone into the issue of Sharia governance, but I think you will all agree with me that the panel has really done justice to this topic. They've been really quite generous with, the explanations, and please join me in thanking Brother Walid, Brother Mian, and Brother Saif, and Brother Ijlal for these very useful insights. I personally really have learned a lot, and I'm sure, many of us, will feel the same way. So thank you very much. Really appreciate it.
Ladies and gentlemen, a warm round of applause for our esteemed panelists, the session chair. Thank you very much for a very insightful session. Indeed, there was value addition, at least for me. Sukuk is a very, very important topic, and I think you guys covered it in a very nonchalant manner. So thank you so very much. May I now invite the chair and the panelists to have a group photo before we break for lunch.
Thank you very much.
Lunch is being served, ladies and gentlemen, and then let's be back in 1 hour time to continue with the remaining items of today's agenda. Thank you very much, and see you in an hour's time.
Chairman, come in the middle, sir.